Karani Securities Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing the star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Annamalai Jairaj from Karani Securities India Private Limited. Thank you, and over to you, sir.
Thanks, sir. Good afternoon. Thank you for joining us today and welcome to ZF Commercial Vehicle Control Systems India Limited call to brief you on the quarterly earnings. Today, the fourth quarter earnings and the annual results for FY 2023-2024 will be presented by the management team of ZF Commercial Vehicle Control Systems India Limited. Your host today from ZF Commercial Vehicle Control Systems India Limited are Mr. P. Kanniyappan, Managing Director, Ms. Shweta Agarwal, CFO, and Ms. M. Muthulakshmi, Company Secretary. I will now hand over the call to Mr. P. Kanniyappan, who will provide further insights into the results. Over to you, sir.
Thank you, Mr. Jairaj. Good afternoon to all of you. I warmly welcome you all to ZF Commercial Vehicle Control System India Limited's fourth quarter results and full year performance for FY 2023-24. Certain forward-looking statements that we will make today are based on management's good faith expectations and beliefs concerning future developments. As you know, actual results may differ materially from these expectations as a result of many factors. ZF Commercial Vehicle Control Systems India Limited results for the quarter ending March 31st, 2024 and the annual performance for FY 2023-24 were published on May 24th, 2024. They are available on the website www.zf.com under the ZF CV India Investor Relations section. We hope that you have had an opportunity to go through them. A transcript and a recorded audio of this call will also be made available on the website www.zf.com under the ZF CV India Investor Relations section. I am happy to talk to you today as we give you an update about the business of the company. First, I will start with the industry and economic updates. I would like to start by talking about a few key macroeconomic aspects relevant to our industry. The Indian economy is growing at a robust pace with an average annual growth rate of 8% during the last 3 years. India continues to be the fastest growing major economy in the world, supported by an upturn in the investment cycle and revival in manufacturing. As per the second advanced estimate released by RBI, real gross domestic product GDP expanded at 7.6% in FY 2023-24 and 8.4% in Q3 FY 2023-24 with a strong investment activity and a lower drag from net external demand. Looking forward, the monsoon is expected to be normal, which should support agricultural activities. Manufacturing is expected to maintain its momentum on the back of sustained profitability. Services activity is likely to grow above the pre-pandemic trend. Headwinds from geopolitical tension, volatility in international financial markets, geo-economic fragmentation, rising Red Sea disruptions, and extreme weather events, however, pose risks to the outlook. Taking all these factors into consideration, real GDP growth for 2024-25 is projected at 7%, and CPI inflation for 2024-25 is projected at 4.5%. The growth prospects of the Indian economy in 2024-25 looks bright. Source: Reserve Bank of India press releases. Indian commercial vehicle industry, fueled by government investment in infrastructure, stable fuel prices, and a strong industrial sector, EV vehicle production more than 6 tons experienced a growth of 6.2% in FY 23-24. However, in Q4 FY 2023-24, there was a degrowth since OEMs probably focused on inventory reduction measures. Now, I would like to share some insights on the specific initiatives undertaken by the company during FY 2023-24. For OE sales, in Q4, the production of commercial vehicles above 6 ton degrew by 7.2% due to the inventory reduction measures by OEMs, and our company grew by 0.8%, outperforming the market by 8%. In FY 2023-24, against 6.5% growth of the OE vehicle production, the company recorded OE sales growth of 16%, that's outperforming the market by 9.5%. This was due to the following key growth drivers. Launch of pneumatic and hydraulic electronic stability controls for buses complying with the new regulations. Increase in tractor-trailer combination to 17% from 8% the year before, and growing adoption of lift axle control systems in the trailer segment. Increased adoption of high-force actuators in the heavy-duty trucks and advanced air processing units in the bus segment. In the next few years, electric bus production is expected to increase rapidly. The company is well prepared to meet these increasing demands with its portfolio of e-mobility technologies, including electric compressor, electronic braking systems, electronic stability control, and electronically controlled air suspension among others. The government is expected to mandate the advanced driver assistance systems, ADAS. Within that, advanced emergency braking system and lane departure warning systems regulations in the next few years. The company is working with OEMs and co-creating advanced safety and ADAS roadmaps to meet future customer and regulatory requirements. Aftermarket. Our aftermarket sales grew at 4.5% in Q4 and 11.5% in FY 23-24. The drop in Q4 is attributed to lower activity in mining and the slowdown in government-funded projects. The growth in the aftermarket segment is driven by launch of new products including door control systems, 11 variants, improved penetration of digital solutions, increase in 2,500 connected vehicles in Q4 and 58,500 connected vehicles in FY 23-24, totaling to 170,300 connected vehicles in our platform. Trailer Pulse, a digital solution for the trailer segment, has been introduced in India with about 650 plus trailers of leading other cargo carriers fleets already connected with us. Growing sales in the STU segment, increase in the sale of automatic flag adjusters and clutch marker cylinders for the STUs. Also, the aftermarket sales is growing because of the use of data analytics to identify and address the white spots of top 10 products. Export of goods. The company has registered a degrowth in export of goods in FY 23-24 at 2.3% and a degrowth of 15.5% in Q4 of FY 23-24. This degrowth is due to a sales drop in Q4 caused by inventory reduction globally and from our customer locations and delays in sea shipments as the import shipments lead times increased from 6 weeks to 9 weeks. However, the future looks positive due to increasing order books and the new projects in the pipeline, mainly clutch compressor assembly and actuator assembly for new customers. Export of services. Export of services grew at 14.1% in Q4 and 30.5% at full year 2023-24 due to increasing engineering activity from India to global. Footprint expansion. The company inaugurated its sixth manufacturing plant in India on February 14, 2024 at Oragadam near Chennai. The inauguration took place in the presence of distinguished guests, including Dr. T.R.P. Raja, Honorable Minister for Industries, Government of Tamil Nadu, and Professor Dr. Peter Layer, Member of the Board of Management of the Group. Spanning over 7,000 square meters, the plant will operate as a hub for manufacturing and assembling electric mobility and advanced mobility technologies for light, medium, and heavy-duty commercial vehicles. This plant underscores our commitment to sustainability by operating with 100% renewable energy from day one. The facility has a solar power plant capable of generating up to 450 kilowatt peak power, supplemented by further solar and wind energy through long-term contracts. Additionally, the plant incorporates rainwater collection and reuse systems aiming to achieve water neutrality by 2025. The plant is operated by around 80% women employees. ZF Commercial Vehicle, ZF CV Control Systems Manufacturing India Private Limited, the wholly owned subsidiary of the company, commenced with commercial production in March 2023. The wholly owned subsidiary recorded sales of 34.8 crores and a profit after tax of 1.7 crores. This entity is eligible for a lower tax rate of 15%, and actions are being taken to ramp up production of this entity. CSR outreach. The company CSR efforts are guided by ZF Group's Acting Now principles, focused on 4 pillars: improving road safety, enhancing the quality of life in neighboring communities, promoting environmental sustainability, and supporting skill upgradation. During the year, the company took up the following CSR initiatives: road safety, provided braking system testing equipment at 20 regional workshops and driver training institutes under the State Transport Undertaking STUs in Chennai, Lucknow, and Jamshedpur. Worked with the local authorities and upgraded 9 solar-based traffic signals and 20 blinkers in the Avadi traffic zone. Skill upgradation. Set up a skill lab, mechanical skill lab at the Government Polytechnic, Pantnagar. Set up computer lab, advanced fitter and welding lab, soldering lab at Government Polytechnic and Government ITI at Barabanki, Lucknow. Community development. Upgradation of primary health centers across multiple locations in the proximity of our plants to support them with necessary medical infrastructure and critical medical equipment. Installed 365 solar streetlights in communities near Lucknow, Jamshedpur, and Chennai. Supported 5,000 cyclone-affected families in collaboration with local authorities during the Mid-Term cyclone. Sustainability. Restored a 650 square meter pond in Nappedu near our test track. Replanted 5,400 trees with proper watering systems post-cyclone. Awards and recognitions. During the financial year, ZF Commercial Vehicle Control Systems India Limited won the following customer awards: Sustainability Excellence Award from Tata Motors, Special Award for Partnership and Collaboration from Volvo Eicher Commercial Vehicles, Best Technology Partner Award from Mahindra and Buses, Green Channel Supplier Recognition from Ashok Leyland, My TVS Partnership Excellence Award at Aftermarket Support from Key Mobility. Ambattur plant won the Responsible Manufacturer Award, Gold category, from Ansei Kaizen Institute in recognition of our ESG performance. The Ambattur plant was also awarded the Platinum Award for overall EHS, Environment Health Safety practices at the CAI National EHS competition. The Mahindra World City plant was awarded the Going Global Commendation from CAI for its export performance. Our employees continued to demonstrate high levels of engagement and participated in various external total employee involvement competitions, winning numerous awards across several categories in the last fiscal year. I'm happy to share that in Q4FY23-24, our teams won a total of 9 national awards in the various competitions organized by the CAI, ACMA, and QCFI, and many more awards at regional level. BRSR. The company will be publishing its first ever integrated annual report along with the third BRSR report for the year. We are happy to state that in some key parameters like utilization of energy from renewable sources, wastewater generation, water consumption, and waste generation, the company showed significant year-on-year improvements. Now moving on to our financial performance for the quarter. For your ready reference, the results were made public at 4:47 p.m. on 24th May 2024. I hope you have had a chance to go through that. As stated, Commercial vehicle production above 6 ton degrew by 7.2% in Q4 FY2023-24 over the same quarter in the previous year. However, CV production registered a growth of 6.5% for the full year 2023-24 over 22-23. I would like to state that the company outperformed by about 8% in this quarter and 9.5% in the full year 2023-24. Our sales thus to OEMs in this quarter is 474.3 crores, which is 0.8% higher than the prior corresponding quarter. We also closed the year with sales to OEMs at INR 1853.8 crores, which is 16% higher than the previous year. Our aftermarket sales were up 4.7% over the same quarter in the previous year, amounting to 130 crores. And year on year, our aftermarket sales grew by 11.5% to 478.5 crores. Export of goods registered a big growth of 15.5% in Q4 FY2023-24 over the same quarter in the previous year, amounting to 249.7 crores. While year on year, the exports declined by 2.3% to 1,074.7 crores. Our engineering and other services continue to provide very strong value to our customers in the group. The growth in services income is very healthy at 14.1% in the corresponding quarter and 30.5% year on year. Though the market is facing some headwinds in the near term, our fundamentals remain strong. Overall, we have achieved a profit before tax of 136.2 crores in this quarter and rupees 546.4 crores for the full year 2023-24. Our FY 2023-24 PBT is 16% of product sales. Our EBITDA for this quarter is 19.4%, and for full year 2023-24 is at 19.4%. Thank you. We welcome your questions now.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. Ladies and gentlemen, if you wish to ask a question to the management, please press star and 1. First question is from the line of Annamalai Jairaj from Batliwala and Kirana Securities. Please go ahead.
I have a few questions, sir. One is, now we have started supplying electronic stability control for buses. So, in that, will our import content be high because of low volumes, or we have already localized regulators?
Yeah. The current situation is about 800 ESCs per month in the normal times is being consumed. This volume is actually quite low for localizing the full system. But what we have done is anticipating this evolution of regulation of ESC. We have already localized the ECU, electronic control unit, with an Indian Indian supply chain. And the other products we will progressively localize. So the idea is when the volume, because we expect the regulation to cover more buses. Already there has been an indication in from September 2025 more buses will be covered for ESC. We also expect that subsequently the truck segment also will adopt ESC. So we are calibrating our localization plan in line with the volume. But as such, even before the regulation came in, we are ready with the ECU, which is local supply chain.
For trucks, the date is not yet announced.
Truck date is not announced. What we expect after the election, there may be some announcement related to new regulations, in which we believe ESC and this autonomous emergency braking also may be covered, because the CMER committee and others have actually reviewed all the readiness of those technologies. So in our view, it should come soon. This announcement will come soon, so that the industry is getting ready for this regulation to be introduced for a period of next 2 years.
Sir, then on the export front, I think currently most of our exports is to the S2L WAPCO. And any update on whether any export opportunities to the setup group?
Yeah. Actually, we are our export is in some about 4 important product lines. One of course, the main thing is the compressor. A compressor, we have originally started supplying it to one of the global OEMs, Volvo. Then we are extending it to new customers, and this is going to increase from a level of about 215 crores 2023. We expect this to continuously increase, almost double in the matter of 2025, because of new projects which will get implemented this year in the second half. Yeah, that is one. Same case, we are supplying actuators and VDSBA, meaning SBA is an actuator and there's a brake chamber. Again, here we expect a steady growth. If you see in 2023, we did about 400 crores, around 400 crores in this product line. We expect this to increase to about 450 in the this year and next year. So like that, in every area we are working with, working on many new projects to drive the growth.
And any update on our PLI scheme, sir?
Yeah, PLI, the listed entity is it's an approved PLI site, PLI business champion. We need to invest on certain commitments are there to secure that. In order to meet that commitment, we need to invest about another 120 crores before March 2025. We are working on many projects. We are trying to comply with that, subject to customers giving nomination, etc. for all the advanced technologies. We are working on that. Right now, I'm not in a position to commit whether we will be able to complete or not, because the timeline also quite critical. Specific EV programs, we are expecting certain nominations from customers as a commitment to start investment. Maybe in the future calls we will update.
And on the domestic CV side, what is the outlook for the current year?
Current year, if you look at the calendar year, we expect our projection is about -3% versus last year, vehicle production. We expect after the election, because in the last 2-3 months, it was the demand was somewhat subdued for various reasons. Of course, one is related to the coal-related impact, largely in the mining and certain projects which got delayed because of the funding, etc. That's what we understand. As a result of that, also parallelly the customers decided to do some stock correction. All that led to reduction as I explained in this quarter about 1.2%. This quarter also we expected the quarter to be quite weak because of the election, but surprisingly it is not as bad. we expect about this quarter is about minus 5%. So full year we see about minus 3%, but it will improve in the second half. It will improve in the second half. It could be maybe flat from the vehicle production level. But our own plan is to outperform at least to a level of about 10%. So that's the way our outlook in the OE business. Export, it will be back. We don't see a negative in the export in this year. We expect growth roughly the it's in the range of about 15 to 20%. We expect growth in the export. And aftermarket also we are expecting in the low double digits growth.
Okay, I'll come back in the queue. Operator can announce it.
Yeah, sure.
Thank you. Ladies and gentlemen, if you all wish to ask a question, you may press star and one. Participants who wish to ask a question may press star and one at this time. Thank you.
If somebody joins the queue, I have one more question, sir. So what is our current content per vehicle for a commercial vehicle today, and how much can go up for the next, say, 3 years or 5 years, broadly?
Yeah, current content, Gerard, is in the range of about 45,000 rupees as a total, combining all that, including trailers and everything put together. The next 2-3 years, because if you look at it in India, the advanced technologies are yet to fully get adopted. ESC itself, the bus segment, we are talking about 5,000, 6,000 numbers against the 40,000 buses being produced. This also relates to the EV adoption. As and when the more EVs are getting adopted, it comes with EBS, decompressor, and electronic stability control as well. So the adoption is still very, very early stage. We believe this electric bus production will slowly increase. Today it's in the range of 3,700 or 3,800. That's the type of number last year. But we also see there's a lot of focus from the government through the PM E-Seva and other initiatives to drive this growth. Number two, ESC has to be adapted to the trucks. We believe this will happen in the next 2-3 years. Also, the advanced driver assistance system, a part of that is called autonomous emergency braking and the lane departure warning type of regulation. We expect that to come in the next 2-3 years. So if all these things happen, the content per vehicle we expect that to at least double.
Thank you. The next question is from the line of Vasudev Banerjee from ICICI Securities. Please go ahead.
Thanks. A couple of questions. One is, am I right? You said earlier in the call that you expect fiscal year 25 commercial vehicle market to be flattish?
No, I talked about calendar year of 2024.
Yeah.
I expect that to be flattish.
So basically just trying to understand on one side, so much of optimism with respect to capex cycle, infra creation, government spending. And on back of that, already we are through a year of flat number and looking forward to another year of flattish outlook. So on background of such macro optimism, 2 flat years for commercial vehicles. So as an experienced company getting into this industry, if you can highlight your thoughts with that.
Can you say the last sentence? I couldn't.
Just trying to understand, sir, from your experience, where so much of macro positivity, capex cycle revival, 2 consecutive years of CVs being flat. So your views on that, sir?
Yeah. So actually, if you see last year, 2023, the industry grew. I'm talking about. Okay, you said the financially also. I said it's 6.5% last year we grew. This year, of course, my reference of flat is for the calendar year. But even if you look at the financial year, FY24-25, it could be maybe in the positive, but you also must be seeing some outlook from some of the OEMs or the SIAM president national level. He talks about single-digit growth, high single-digit growth for a financial year. So we also have a similar view because this year, Jan, February, March, whatever happened, in a way, it's a very, I would say, it's an aberration. We never faced in Q4 financial year. It was negative in the recent years. But that is linked to largely, maybe the election-related stoppage of some of the investments in the mining and construction area. So next year, after the election, we see the market to start, ramping up. So FY23, 24-25 should be a positive zone, maybe in the single-digit level. So also it's a cycle. In any case, this industry is cyclical. In the last few years, it has been growing continuously. So it is 6.5 this year. Next year, if it is around that, you can still feel that that's okay.
Sure, sir. And second thing, sir, just wanted to understand, what is the update on the exports dedicated facility? How's the ramp-up pipeline? What's the advancement with regards to that, along with the ZF portfolio integration with your portfolio, or Twile Wapco portfolio?
Again, I couldn't hear clearly. Can you say it again, please?
Yeah, audible now, sir, better?
Yeah.
Yeah, I just wanted to understand, sir, what the progress of the exports dedicated facility, how the ramp-up pipeline, timelines, etc., and what's the update on ZF portfolio integration with the Wapco portfolio as of now?
Okay, so I think the first question is related to exports, no?
Yeah.
So exports, today we do exports in broadly four areas. One area we have been building a strong position in export of compressors from India. Compressors from India, we started with one customer, global customer, then we added the second customer in around 2022. Now we are adding the third customer, all big five global commercial OEMs. So that customer we are adding this year. And again, the portfolio of the products also becoming stronger and indicating that the high value products we are producing, like clutch compressors in India. So this, from a level of 250 crores last year, we expect this to go to 500 crores in a matter of next 2-3 years. We have a clear pipeline. These are all based on specific orders and with a clear execution plan. Second product line we deliver is to various customers, basically the actuators and brake chambers, which are essentially developed in India for global market, and that we are gaining increasing position. What we started with one assembly line, now we are having 4 lines, and this year we are adding, in this quarter we are moving to 5th line we are adding. So this also we see a growth in the volumes as we move forward. From about 400 crores, we expect the volume to increase to 450 next year. This is the second product. The third product line is for BMW. We supply, because one of the car industry is supplying an air supply unit. Again, from 250 crores, we expect that to go to 300 crores. So all areas are only looking at that growth. And the fourth, of course, is that valves and other assemblies we do. So that is not a very significant number. But then again, we only see a growth there. Because the way we drive our growth is largely because of our competitive positioning globally. With this price point, with this price point, we are expanding our market position in other parts of the world. That is expanding. Further, we are now looking at few products in our Oragadam site. Maybe in a future meeting I will share. So it's something that earlier we were buying from a supplier. Now we are able to localize within the group at the Oragadam site. Once we start, reaching certain level of maturity to the domestic economy, we will also look at that for export. Also, our Mahendra City plant as a bottleneck in terms of space and other things. So with the new site, we are also expanding further opportunities in this site. So I'm sure that bottleneck also is removed. Overall, we are seeing it's only a positive story going forward. Again, I believe the challenge that we had in this quarter is somewhat an aberration, driven by certain global events like the Red Sea increase. It is integration of these ZFO and ZF.
Yeah.
What we are currently doing is all the ZF portfolio has been moved to ZF. Portfolio has been moved to ZF CVCS entity. The advanced regulation system is something that both ZFO and ZF are doing differently. But it's combined and it has been decided to be in the listed company chart. That's why I said if a regulation comes fully in the next few years, there's a potential to double the value per vehicle. Again, when it is fully mature. It will take a few years, but the direction is very clear and the technologies are already more or less proven for India, and two customers are ready to. So one customer is already released, launched for certain applications. But then being a safety-related regulation product, it will be driven by regulation. So we expect some announcement in the next at least 1 month. So, thank you.
Sure, sir, and that's very informative. Thanks.
Thank you.
Thank you. A reminder to all participants that you may press star and 1 to ask a question. Ladies and gentlemen, if you wish to ask a question, you may press star and 1 at this time. Thank you. As there are no further questions from the participants, I would now like to hand the conference over to the management for closing remarks. I'm sorry, sir. Actually, there's a question. The next question is from the line of Sabyasachi Mukherjee from Bajaj Finserv. Please go ahead.
Yeah, hi. Thanks for the opportunity. Am I audible?
Yes.
Yeah, hi. Sir, firstly, one clarification. You said the total domestic OE sales for the quarter is 474.3 crores.
Yes.
Am I right in this number?
You are right.
Can you just break it up with the ABS and non-ABS sales?
See, basically, we are supplying as a total system. If you see a value per vehicle of 45,000, whatever I said, it will take about 12,000 rupees as an ABS stock. The rest is non-ABS stock.
So about 33%. I mean, 1/3 of that domestic OE sales would be ABS, and the balance 2/3 will be Non-ABS, is that assumption correct?
12,000 out of 45,000. So you may take probably close to one-fourth or...
One-fourth. Okay. Okay, got it. Secondly, on exports, the number is 249.7 crores for this quarter, right? Which is almost I think 15-16% decline when I see YOY. But there is a improvement quarter on quarter from 3Q to 4Q. I believe there is an improvement of almost close to 20%.
Yeah.
I missed your outlook on exports, sir. If you can just repeat the outlook for FY25. How do you see it?
Yeah, I see at least 15% growth based on the order inflow that is there with us. Yeah, it takes about 15% growth.
Okay, so 15% growth on exports. You said low double-digit growth in aftermarket, and in the domestic OE sales, outperformance of 10%. So let's say if the industry remains flat, you'll grow by 10%. That's the assumption.
Yes, yeah.
And this will be entirely driven by the increase in content per vehicle, because the underlying volumes, if it remains flat.
Yeah. Actually, just to give you, so India is still in a very, very basic level of technology adoption in our space. Except ABS, nothing much has happened. But if you see, there are many more pipeline of technologies which have to come. One is EBS for the electric vehicles. But electronic stability control is a technology which today only in the bus segment government has mandated. But even though about 40,000 buses are produced, somehow the applicability has by different interpretation has been reduced to only 5,000 or 6,000 numbers per year. But this will change, because this is an excellent technology which actually it will significantly reduce the rollover accidents. It's a proven thing. Then you look at EBS, electronic braking system. Electronic stability control also is required when the mandate comes for autonomous emergency braking, which is essentially, again, many parts of the world it is already mandated. We expect that to be also announced soon here, with probably 1 or 2 years time frame for implementation. Again, the big impact on the content vehicle can happen when it comes. The third is the electronic braking system, which is essentially an efficiency, a better efficiency on the braking. It improves about 5 to 8% improvement in the efficiency of the vehicle itself. So all that has to be adopted. We're still in the, I would say, in the very basic level of adoption of technologies. We hope in this direction things will move fast, because the industry is more and more moving in the global level. If you see the increased axle load and all those things, calls for much more technology oriented approach to handle the road safety issue. So I understand the industry is realizing it. It's a matter of time it will start coming to India.
Sir, on the electronic stability control, I think 2 quarters back, on quarter 2 earnings call, you mentioned that I think the adoption is somewhere around 40-50% in the buses. What is it right now, and when do you expect this number to go up and reach, let's say, 80-90%?
Yeah. So what really happening is slowly they're excluding, the OEMs are trying to exclude in certain applications. For example, if the buses are produced inside the company, then they implement. If it is bodybuilding happens elsewhere, they try to avoid, etc. Okay. So that is happening. Today I would say about 8,800 buses per month are fitted with this, against typically about 4,000, maybe around 3,500 or 4,000 buses being produced. So you can say about 20%, 25%. It has come down. But next, from September onwards, there is another September 25. There is a mandate which insists, adoption to more applications. Maybe if you want some detail, I can also share. So what is happening is there are 4 types in the buses. Type 1 is buses for urban, semi-urban, city buses. So here, by design, by mandate, ESC is not applicable because these buses are supposed to travel much more. It's in the city or low space. Then you have intercity buses. This is called Type 2. The Type 3 is coach buses for long distance with passenger comfort. So Type 3, Type 4 is special purpose vehicles, school bus, sleeper coach, tourist, double decker, etc. So initially, they were also there was a understanding that even school bus may not have, but later this is included. That is still not fully adopted. So there are adopted in multiple levels it is. But then we expect from September to 25, all the buses that are fully built or buses built, now bodybuilders are excluded because on the buses the chassis goes out, neither the OEMs take accountability nor the bodybuilders. But from September 2025, it has been mandated that whether it is built in the OEM position, place or in the bodybuilders, it has to have that ESC, etc. So we expect this progressively this will increase. Maybe when that happens, maybe about 80% of the applicable models, because excluding the city buses and others, the rest will more and more have that ESC.
And what would be, sir, the content value? Let's say these 800 buses per month are being fitted with the electronic stability control. For you, what would be the content that is going into these buses?
It's the Delta content you may take probably about 30,000 rupees.
That is the Delta?
Yeah.
Okay. And for the other, drivers, like you mentioned, e-compressors to be one, then there is electronic braking system, then there is ADAS, collision mitigation. Can you just highlight what would be the approximate content for you, the Delta content that would flow to you?
Yeah. So the electric compressor, if you look at it, maybe anywhere between, I would say, 85,000 to 100,000 rupees. That's so any electric bus that is fitted, that generally goes mostly in India goes with our e-compressor. Then an electronic braking system with ESC together should be in the range of 60,000 rupees content, Delta.
Sorry, sir, I missed the last part. Can you just repeat, please?
See, normally in the buses, there are two approaches. The electronic braking system with the ESC is one. Largely, most of the buses, electric buses are going with that platform, that program. It has an electronic braking system. In that electronic stability control also, it's included together. So that is about 60,000 rupees Delta. I said ESC itself is about 30,000. So if you see in this the EBS part will be another 30,000. And there are cases specifically only EBS alone if you want to do. Again, the content is close to 50,000. So because there when you combine, you are able to eliminate certain aspects of the electronics. So you are able to provide. So for you can take 30,000 for ESC. EBS will be in the range of 60,000, 50 to 60,000 Delta.
And whatever you are supplying right now to the electric buses, is it only ESC or EBS with ESC?
Electric buses, there are two things. Electric buses, they are going for a EBS, electronic braking, because it's very efficient braking. In electric buses, you need to diligently use the power, the battery power. So efficiency is very critical. So most of them are adopting electronic braking system. That is number one. I also said today the buses are mandated to have electronic stability control. So it is combined. So most of the electric buses, I would say 90% of the electric buses now in India will have both EBS and ESC, electronic braking system and electronic stability control. So 10% of the buses, they don't use the electronic braking system, they use the ABS-based braking system. They are because they are concerned about the cost, so they have chosen to be like that. But otherwise, 90% of the electric buses in India are with the EBS and ESC. So you get in electric bus, you get a condenser vehicle of almost about 100,000 rupees because of electric compressor, and another 60,000 rupees because of the EBS and ESC. So you are talking about 1.6 lakhs additional content.
This 1.6 lakhs is basically you're supplying to the 800 buses that are being produced every month.
Not 800. Okay, now I'll give some more details. Actually, last year India produced only 3,700 electric buses. Then it is 300 on average per month. Because electric bus production, in our view, will pick up after the election, etc. There is an increasing trend. Still, our numbers are very low. So about 300 electric buses are produced roughly on an average every month. Then out of 800, another 500 is only electronic stability control alone. That is due to the mandate.
Got it, sir. Okay, that's all from my side. Thank you for the explanation.
Thank you.
Thank you. As there are no further questions from the participants, I would now like to hand the conference over to the management for closing remarks.
Thank you. Thank you for joining the call, and of course, I'm sure it will help you to get certain clarification that you wanted. Thank you very much. Thank you for joining.
On behalf of Batliwala and Karani Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you.